Supermicro Computer reported a massive fourth quarter revenue beat of $11.1 billion, up 91% year-over-year, as global demand for artificial intelligence server infrastructure reached unprecedented fiscal volume. GAAP gross margin jumped to 17.5% from 9.5% in the prior year period, representing an 800 basis point expansion driven by a temporary favorable product mix. Operating margin reached 13.4%, while net income surged 504% to $1.178 billion. GAAP diluted earnings per share expanded to $1.62, up from 31 cents in the fourth quarter of fiscal 2025. Full-year fiscal 2027 revenue guidance shattered street consensus, projecting between $65 billion and $72 billion, with a midpoint of $68.5 billion, compared to prior analysts' estimates of roughly $52.5 billion. First quarter fiscal 2027 revenue guidance was set between $14.5 billion and $15.5 billion, with management expecting artificial intelligence server deployments to account for over 80% of overall shipments. New order bookings exceeded $60 billion during the fourth quarter alone, with approximately 70% driven by pure artificial intelligence architecture. Customer diversification showed measurable progress across Tier 1 cloud and enterprise accounts, as the count of clients generating over $1 billion in revenue expanded from 4 to 9. Direct liquid cooling technology remains Supermicro's core competitive differentiator, with the company commanding an estimated 70 to 80% global share in direct liquid cooled artificial intelligence server racks. Total manufacturing capability reached 6,000 racks per month, including 3,000 liquid-cooled units. Balance sheet metrics improved significantly, as fourth quarter free cash flow swung to positive $722 million, reversing prior mid-year cash burn and pulling net debt down to roughly $1.2 billion. Valuation metrics highlight a severe discount relative to legacy server peers, with enterprise value to revenue at 0.83 times versus Dell's 2.35 times, and forward price earnings trading at roughly 9 times compared to Dell's 14 times. An August 11th special committee investigation finding of no accounting fraud sparked immediate short covering, supporting a stock price of $31.60 and a total market capitalization of $20.4 billion. Structural margin sustainability remains a central point of vulnerability, as full-year fiscal 2026 GAAP gross margin averaged only 10.8% across all 4 quarters combined. Management signaled that the fourth quarter's 17.5% gross margin was a mixed outlier, guiding first quarter fiscal 2027 margins back down toward low double digits. Working capital friction persisted through rapidly surging accounts receivable, forcing a diluted $7 billion capital raise in June, while non-binding purchase orders, historical single customer revenue concentration reaching 62.6%, and server market share gains by Dell present the ongoing commercial headwinds. Federal legal and governance investigations continue to cast a heavy shadow over corporate operations despite internal board clearances. Department of Justice indictments against co-founder Wally Lior in an alleged $2.5 billion artificial intelligence chip smuggling ring, coupled with ongoing Department of Justice and Securities and Exchange Commission subpoenas, a law enforcement raid on Taiwan office facilities, and pending shareholder class action suits, maintain persistent regulatory overhang. Analysts' questioning on the earnings call centered on gross margin durability, order composition, and board investigation timelines. Blue Capital analyst Ananda Baruah pressed management regarding fiscal 2027 gross margin progression following the June quarter spike, prompting Chief Executive Officer Charles Liang to detail a strategic sales pivot toward higher margin storage, CPU, and enterprise systems to balance lower margin GPU volumes. JP Morgan questioned customer concentration and core demand drivers behind that $60 billion booking surge, leading Liang to clarify that 70% represented pure AI deployment, while CFO David Wiggin confirmed an upcoming formal update on the board investigation.